right, all right. Tuesday morning. Good morning, you magnificent MelonHeads. What's up, guys? I am nobody special. Welcome to Tuesday morning. Markets are opening. We can have a repeat of yesterday. That nonsense from yesterday. My God, what happened? We're going to talk a little bit about what happened yesterday. Talk a little bit about the unfortunate business going on in Eastern Europe. Talk about energy markets. Turkey's losing power. We got the Fed coming up this week. Man, we got a crazy week ahead of us. It's already been a crazy week. We're only one day deep. Man, I don't know. But look, I got to warn you guys, I am definitely not a morning person, so I am going to be about as sharp as wet leather right now. But I have my wake-up juice in hand, so we will struggle through this together. I see a lot of familiar faces in the chat already. Good morning, everybody, or good evening, afternoon, depending on where on the globe you are, because you MelonHeads are a global phenomenon. Welcome, Cole Marsh, Wide Winger, Living Our Destiny, Neil Hahn, Steph Bohr, hello. Mish is in the house, the moderator. Tom Stencil. Yankee Zulu, I saw Devin Brines was in there before. All right, the markets are open. Let's shrink my big fat melon of a head and let's see what is going on today. Let's see, S&P, we're still doing futures. The market has not woken up. Why are you still showing me futures? Here we go. S&P looks like we're down about 1.33% right now. But heading in the right direction. The Dow down about 1%, continuing that trend where the Dow outperforms. The NASDAQ down 1.6%. Again, we're still seeing that secular rotation out of the big tech names and into the industrials, into the more value-driven names. Although the industrials and the value names, they're heading down too. They're not immune to these sell-offs, but they are faring much better than those high-flying, high-multiple tech unicorn types. The Russell is positive for the day. Okay, and the Russell, you're overdue because the Russell actually touched into bear market territory yesterday. At one point, the Russell was down 20% off its high, and we'll talk about that a little more. Oil having another good day at 83.60, and there is certainly no shortage of geopolitical risk in the oil markets right now with everything unfortunate that is going on. It's one of the few sectors I remain largely bullish on. Gold, not sure what it wants to do today. Hovering still in that mid-1800s range. Silver, my favorite of the shinies. I feel just terrible like I jinxed that rally in silver the other day when I made the video about the 200-day moving average. Because, man, we were right there. We were right there. And, of course, we failed. We did not succeed in retesting the 200-day moving average, and we've been heading down ever since. Let's look at that chart while we're here. Yep, here, right here. That's where I had to open my big fat mouth, right here. I said 2467. You go back and see that video. I even put it, that was the Wi-Fi password that day. I said, watch that level. We're going to go up to that level, and we're going to back test it. And if it holds, then I'd be looking at buying some mining stocks, maybe even some the miner ETF. But we went up to 2471, came right back down, and we have not recaptured that level since. So for now, I mean, in my... Uh-oh, we got somebody calling in. This is a first, folks. You're on the air. To whom am I speaking?
I'm at the fire station. I told the guys that messed with you. Are you telling them about the event?
I am. You're actually in the middle of my live stream right now. Folks, we have none other than the Economic Ninja is on the phone with us right now. I'm holding you right up to the microphone, brother.
Sweet. I just want to know if everyone is having an amazing day and getting ready to crush it from this next stock market collapse.
We are definitely getting ready to crush it. Somebody crushed it yesterday. Someone bought that dip hard. I don't know who it was. It certainly was not me. But
I got to be honest with you though. I think that's a lot of triggering institutional, algos running right now, and I'd be surprised if we don't see another little dip in the next few days. That's what I'm looking for.
Yeah, Joe Brown from Heresy Financial just did a video about that yesterday. saying that it really looked like it was algorithm driven. I mean, it was right at the 10% mark off its highs, like to a T, that all of a sudden the buying came in and bought it hard. So
exactly, and it's very interesting that all of those numbers were either hitting correction territory or bear market territory. So if we slip, we could see a nice little dip, and the Federal Reserve have to move in and stop their idea of raising rates.
yeah.
So we'll see. Well, hey, I'll let you go, man. But,
Well, hey, real quick, Ninja. While I got you on the phone, I have something up on the screen right now. It says Ninja Nation, speak freely. And let's tell everybody about it while I got you here on the phone in Dallas on March 5th.
Yeah, pretty excited about it. Got all of you guys coming to speak. Really excited about it. Got Andy Hoffman coming. We might have a special guest. We can't say who they are or who he or she is right now because we don't know. But that'll be a total surprise. But everybody's bringing something special to teach people on what to do as far as setting up their stock portfolios. From an actual licensed stockbroker to how to run a business, how to start a business, all those kind of things, how to buy rentals. So we're really excited about bringing you guys some real down-to-earth knowledge, things that some of the people, YouTubers, have never talked about on YouTube. So we're excited about that.
Yep, and that is going to be March 5th in Dallas, Fort Worth, folks. You got the Economic Ninja will be there, Joe Brown from Heresy Financial, yours truly, nobody special, Chris Taylor from Financial Fitness, Andy Scheckman, the analyst, David Granados is going to be there. It's going to be a great time. Andy Scheckman was nice enough to sponsor this event for us. So hopefully we can see you guys. I will put a link in the description to this live stream. It's actually in there already where you can go and reserve your place. And don't wait because this place is filling up fast and it has limited capacity.
Right on. Hey, you guys all have a great day.
All right.
See you later.
Thanks, Ninja. Thanks for calling in.
See you, man.
That was a first. That was a first for my live stream, my first call-in, and who better than the Economic Ninja to call in. So thank you, Ninja, for calling that in. Again, folks, this is going to be a great time. This will now be the second of these events that I've done with this crew. Just an amazing group of people. I learned so much, not just from these guys, but also from all of the viewers and all the subscribers who came to that event. Everybody brings something different to the table, is another piece of the pie, another piece of this story. And it was just such a real blessing to be invited to that event in Denver and now to do this one in Dallas. I'm really excited to do this again. So I hope I can meet more of you guys there. I'm really looking forward to this event. I'll be doing a talk about Evergrande and about the China housing contagion, and it will be my deepest dive yet. So again, I hope to see you guys there. Link in the description of this event, so you can check that out. And now I see we have some questions rolling in. So we are going to increase the size of my head. And I've got Steve Woitas, sir. Thank you very much for the super chat and for supporting the channel, sir. I really appreciate that. And Steve's question is, at what WTI oil price would you consider nibbling on oil equities? That's interesting, Steve, because I actually did nibble on oil equities back when oil was about $67 a barrel. I did a video. It was on November 30th. It was just, it was a few days after that ridiculous Black Friday sell-off on the news of the new scariant. And I had just said that the sell-off in energy was so way overdone that the supply chain issue was hitting oil as well as the other energy stocks, and that they were pricing in almost like oil was headed negative again with the new variant and everything. And I didn't buy that story. There was way too much deal being made out of it. Plus the geopolitical risk. My God, the world is a tinderbox right now. The Middle East, Eastern Europe, the South China Sea, any one of those things could just send oil prices higher. And I don't mean a couple of bucks higher. I mean hundreds of dollars higher if something like that were to really break out. And I'm not being hyperbolic here. Like the impact on oil prices, we have not seen a major military on military armed conflict in this world since Korea? I mean, it's been 60, 70 years at least since two major technical militaries have gone at it in this world. And the effect that'll have on energy markets, nobody knows. It'll be big, though. So, Steve, I've already started nibbling on energy stocks. I bought call options in XLE. Now, I've been selling those calls as we've been rising up. I'm down to about a third of my original position, and I've done pretty well on that one. I'm at the point now, my calls expire in March, so I don't want to hold it into February because that's when the theta decay really starts to eat away at it. So I'm probably looking at rolling that position up and out. I'll probably buy at a higher strike a little bit further out. I'm not sure if I'll buy XLE or if I'll do something else because I've noticed XLE has not very closely tracked the price of oil. It has moved with oil, but it hasn't been dollar for dollar. I think I probably could have done a little better in another fund or something else. So I'm still going to be looking into that. But energy is the one sector that I am still extremely, extremely bullish on for the sole purpose, besides everything that's going on with inflation and the supply chain. But the geopolitical risk is just so intense there. So, Steve, thank you very much for your question, and again for the super chat for supporting the channel, sir. I really appreciate it. And on that token, I had another question from Devin Brines earlier. I told Devin I would get to it. Let's see. Okay, Devin says, I'm going to ask in this stream or before, you like food and energy will either go up if the Fed is aggressive and stocks crash. Will either rise if Ukraine escalates. I'm in cash right now, but would consider investing in one of those two sectors if they do well in either environment, especially interested in energy. All right, so two-part question there. You've got the, my investing strategy. I mentioned in my video yesterday is how people are going to eat and how people are going to heat, right? Food and energy. Those are the two sectors I'm bullish on right now. And I think those two sectors are somewhat asterisk immune to these wider market sell-offs that are going on, because even in good times and in bad times, people need energy and people need food. And you do have some very bullish some very bullish tailwinds in those two sectors that, in my opinion, can overcome these market tailwinds that are dragging us lower. So let's take one thing at a time. If the Fed is too aggressive and stocks crash, okay, if the Fed causes the market crash, as I suspect is coming later this year, I don't think that's happening yet. I think that'll happen later this year. That's going to take everything down. Okay, so the energy stocks will sell off with everything else in that case. I'm planning to be out of my energy positions, at least most of my energy positions, like my oil, my XLE. I want to be out of those before that big Fed crash happens, which personally I don't think that happens before June. I think we're still a few months away from that, although yesterday it sure looked like it was starting. But I'm usually early when I call a crash. I'm rarely late to call a crash. I'm one of those perma bear types, so take that with a grain of salt. Now, the food situation, I've been investing in an ETF called Corn, ticker CORN. I guess I have to say, disclosure and cover myself here. Not a financial advisor, not financial advice. It's only financial edutainment. Do your own research, your own DD, arrive at a decision right for you based on your unique situation. But the ETF that I've been buying for my food investment is ticker CORN. And that invests in the actual corn futures, because I think corn is going to be particularly impacted by this fertilizer situation, because corn requires more fertilizer than other crops do. So that one I don't think will react as heavily to that wider market crash. I think because we may see some sell-off in commodities if that happens, but I don't think it'll be as intense as the sell-off in some of the other asset classes like stocks, like real estate, like crypto. So that one I may stay in a little longer. I bought call options in CORN, and those don't expire until January of 2023. So I wanted to give myself a full year on that one. So I think the energy play is more vulnerable to the Fed. The food play not as much, but nothing is immune to the Fed crash. Everything is going to feel it, at least to a certain extent. Now, on the Ukraine situation, I think both of those investments would rally hard on if things were to light off in Eastern Europe. Energy, certainly, because war is bad for energy production. All right, it consumes a lot of energy, so it's bad for the supply, and you tend to get disruptions to pipelines. Obviously, the flows through those gas pipelines in Ukraine would be affected and are already being affected just in the buildup to this situation. So I think energy would rally hard, very hard, if it came to armed conflict in Eastern Europe. Now, food, maybe not rally as hard as energy, but you have to remember Ukraine is one of the largest food exporters in the world. So if those tanks start rolling across the farm fields in Ukraine. It's going to affect food production in Ukraine. And also the increase in energy prices is going to further hurt fertilizer production, is going to further drive up farmers' costs, will result in lower crop yields. So I think if the Ukraine situation were to light off, it's going to hit food and energy big time, both of them. So excellent question, Devin. Thank you very much. And I appreciate that. And let's see. With that, I just wanted to shrink me again. Let's see what the markets are doing right now. Because we've been open for a little while. Is the sell-off from yesterday going to resume? Or is that algorithmic buying taking off? Let's see. Okay, well, the S&P looks like we're down a little more, down almost 2% in the S&P, down 1.5% in the Dow, down 2.25% in the NASDAQ. So the sell-off is gaining steam now. We'll see. Does it get as intense as yesterday? Again, like Economic Ninja was saying on the phone, it looked like that was algorithm-driven buying of the dip yesterday because it happened. Joe Brown did a video on this over at Heresy Financial. It was an excellent video. It happened almost right on the money at the 10% mark in the S&P, that somebody came in and started buying hard, and not many people have enough money to move the S&P 500 1,000 points in a few hours, folks. That was the computers, that was the big firms doing that. The other thing he speculated was it's possible that somebody who knows somebody who knows somebody may have heard something from the Fed, possibly about a more dovish tone coming out of the FOMC on Wednesday. So we'll see what happens there. And we will be keeping an eye on that situation. Speaking of, saw this little gem on CNBC today. The Fed is likely to signal March interest rate hike, and a further policy tightening is coming. Now, I think the Fed rate hike is probably a given right now in March. I think that's definitely going to happen. I don't think that's going to surprise anyone. Now, if they come in and they start talking about possibly a fourth or a fifth rate hike, or if their tone is a little too aggressive, they're going to spook markets, and I think the sell-off is going to intensify. That being said, Powell loves to mince words and be wishy-washy in his statements, and he's definitely watching these sell-offs. So I don't think Powell wants to spook the market. So he's probably going to be a little bit more delicate in his wording during the press conference, make a lot of comments about being data-driven, but he's also going to say it's not our job to support the stock market. So that we'll keep an eye on that. We'll definitely do a video about what comes out of the Fed on Wednesday. But the meeting starts today. It will continue through tomorrow, and then late tomorrow we'll have Powell's press conference, and all eyes will be on the Fed when that happens. So we're going to keep a close watch on that one. Okay, let's see. We got a couple more questions. Ukraine is number one in tracking right now on Twitter. All goes back to the insanity of fiat. They want a war to distract, another internet shutdown to block true news, which will falsely be blamed on Russia. Another FF or false flag. A lot going on there, Litecoin leader. I could tell you, I do believe they want a war. They being the ruling class, if you will. With everything that's coming, history has shown when it gets too expensive to eat, people get more difficult to control, right? You tend to get more social unrest. We saw that in Kazakhstan, right? We saw that the last time food got this expensive in 2011, we had the Arab Spring. So when it gets too expensive to eat, governments have a bad habit of crumbling and falling. And I'm pretty sure the ruling class sees the writing on the wall with food inflation. Food is already at historic highs, and we've been covering this fertilizer story here. The price of fertilizer has doubled, even tripled for some. That's next year's food getting even more expensive. And I think global crop yields are going to take a hit this year because of this fertilizer price. Supplies are uncertain. Farmers are going to use less of it. You're going to have less crops growing. If you're worried about the public being angry and you're worried about pitchforks and torches outside your house, what better way to deflect public anger than to start a war? And it sucks, but history has shown that this is what happens, that they do this. Look at the Falkland Islands. I talk about this a lot. The Falkland Islands. You had the Argentinian military junta was just absolutely running that country into the ground. The Argentine economy was collapsing. So what did they do? They invaded the Falkland Islands. There had been disputes over ownership of the Falkland Islands for years. Why all of a sudden did they invade? Because their population was getting angry, and they were trying to deflect all that anger outward towards the UK, so they started a war. So, I hate to see it, but it seems like human nature will prevail again in this case because I see war drums being beaten all over the world right now. And when it gets really expensive to eat, when there's economic turmoil, the powerful elites, they need us to fight each other in order for them to keep their power. So maybe I'm getting a little tinfoil hatty here, maybe not. I don't know, but it's just what I see happen. In the end, nobody wins except those who bet for war. OFC says 1-2. I agree. Nobody wins in this case. It's much better to just do business, folks. Wait until the truckers hit the Parliament buildings in Ottawa, says Cole Marsh. I've been seeing that, Cole. The last I heard, it was something like 70 kilometers long. This convoy of Canadian and American truck drivers who are, I guess they're heading towards Canada's Parliament. Is that where they're going? I haven't read the full story, but I've seen the videos on Twitter of this line of trucks that you just see the headlights going off down into the distance. The convoy. And the bare shelves thing is really trending on Twitter. I guess I haven't really seen it where I am. The shelves are getting less stocked where I am, but I haven't seen the totally bare shelves. I've seen a lot of that on Twitter. I guess that's mostly in Canada. Do we have any Canadian folks here in the chat? Let me know what you guys are seeing there, if you're seeing that in Canada right now. Mish says, I recommend 2 books, Snow Crash and Team Yankee. They'll sum up today's world quite nicely. It's interesting, Mish. I have not read either of those. But I will keep an eye out for them. That's good. The YouTube account says, wait until you see it, Raining Men. Okay. Neil Hahn, America needs to take over Canada. Take over Canada, Neil. I don't want to take over Canada. I like Canada right where they're at. Although, can we get rid of Justin Trudeau? Am I getting too political? Would you miss him? Would anybody really miss him? I wouldn't. Sister lives in Canada. It's confirmed, says Bovine Scatology. Thank you, sir, for that data point. That is confirmed. That's good to know. Really is that bad. Shelves are actually fine in my area of Ontario, says Living Our Destiny. Okay. Information rolling in. UK shelves remain well stocked. All right. I'm seeing, I don't want to say well stocked where I am. I'm in Pennsylvania here in the States. I'll say they're like 3/4 stocked. There are some, like the lower shelves are kind of bare. And the supermarkets, as they have trouble keeping the shelf stocked, they won't empty the top shelves or the eye level ones. It'll be the lower ones that'll empty first. And that's just good marketing. Watch Joel Skousen, ex-USMC fighter pilot, states Ukraine will invade, but West will stand down. I think he means Russia will invade. And I do think the West will probably stand down. I don't think there is public support for American troops dying in Ukraine. I don't, not after Afghanistan, not after Iraq. I don't think there's any public appetite for that. And I think, to be honest with you, I think Putin probably knows that. Moving to Florida after GME dropped the marketplace. Interesting. Is GME an input to why you're moving to Florida, Chuck? That's interesting. The GME migration, is that a thing? Trudeau should say bye-bye, says Lucky Luke. Yeah, I wouldn't miss him. Cheshire Yeoman, lower shelves equals hungry dwarfs. Not the most politically correct comment I've ever had on the channel. But after all the talk about investing in mortuaries and making fertilizer out of dead bodies in the last live stream, I'd say this is a market improvement. Here in Sydney, Australia, we're chock full of village idiots. Anyone need any? No, we're all fine here on village idiots. That is the one supply that is not short. There is no shortage of the village idiots. Signal on gold, says Steph Bohr. All right, Steph, please elaborate. Let's take a look at what's going on in gold. Let's see if I can see what Steph is seeing. By the way, on gold, Joe Brown, also another Heresy Financial reference, he did a video on gold today saying that there was record inflows into the GLD ETF. Oh, yeah, look at that little momentary spike in gold there. Looks like it's come right back down. Let me see. Is that just a glitch in the computer? Is investing showing the same thing? Let's see what the gold futures are doing. But he was saying that there was record inflows. Look at that. Yeah. $10 spike in gold. Is silver confirming the move? Let's make this a 1-day chart in silver. Yep, silver's moving too. Okay, not quite as much. Something's going on in the precious metal space here, folks. Thank you, Steph Bohr, for that heads up. 1 million worthless melon head points goes to Steph Bohr. Thank you very much. Not that is, the points are worthless, not you, but thank you very much for that. Hello, gorgeous, says Cheshire Yeoman, and Colmar says hit the like. Yes, I agree. Let's take a look real quick while precious metals are rallying. Is the market still tanking? Down 100 now, 2.4. Yep, the sell-off continues. The Dow is now down almost 200 points. Down almost 2%, down 650 points. The NASDAQ down 375. Again, the NASDAQ is taking the biggest hit in the indexes. The Russell is no longer positive, now down a 1.5%. Crude still doing well. All right, seeing gold function as a safe haven asset during a sell-off. Oh my God, do my eyes deceive me? Is that really what's going on? Is gold doing what gold is supposed to do? Can't be true. Can't be true. Say it ain't so, folks. But look at that. 1850. Doing well. Mish says, hashtag MelonHeads. Absolutely. 2,100 contracts. Is that 2,100 gold contracts, Mish, or 2,100 silver that you saw there? All right, we've got something, mass something I can't pronounce. I apologize, but Mass says, guys, to be honest, how much it can dump. Bitcoin will never be below 20K again. Just be real. Hodlers are always the biggest winners, especially when you check on-chain metrics. All right, so we went to crypto. We haven't talked about crypto in a while, but let's do that. My personal opinion, how much lower can crypto go? That's a question I don't ask. It's almost like if you ask, someone's going to answer. So you don't want to know. Now, Bitcoin had a decent day, or so. You know, it was down as low as 33,000 at one point. Now, somebody said, how high can it go? Or how low can it go? My personal opinion, how low can it go? Probably below 20,000 between now and the next halving cycle. All right, we've seen 80% sell-offs in Bitcoin before. Right now we're down around 50%. All right, our high was like 68, 69,000. So an 80% sell-off from our recent high takes us down somewhere around 17, 18,000. That's where I'd put my floor in Bitcoin. Now, am I saying it's going to 17,000? Definitely no. Am I saying it's going there next week, next month? No, I don't know. All right, and look, I'm not a market timer when it comes to crypto. I dollar cost average in. I do not try to guess what the market's going to do. Now, I can tell you, we've been here before, right? We're now 2 years or a year and a half after the last halving. So this is typically in the seasonality of cryptocurrency, this is crypto winter. All right, we're in the doldrums here. Bitcoin, cryptocurrency is probably going to be pretty boring for the next year and a half. We've got the next halving in 2024, and that's when this thing is going to go parabolic again. The question is, how low does it go between now and then? My guess is the floor is about 17,000. That's as low as it goes, and that's not too fancy. That's just 80% haircut from the all-time high. That's how I arrived at that number. I continue to dollar cost average into Bitcoin. I continue to mine Ethereum. As long as it's profitable, I'll keep doing it, the Ethereum mining, and I'm still making more than the electric cost me to run the miner, so I'll keep doing it. But the days of the big moves in Bitcoin, I could be wrong. I'm not a crypto timer, but I think it's probably going to be boring for the foreseeable future. But this is when money is made in cryptocurrency. Again, not a financial advisor, not financial advice. This is just financial edutainment. But if I had been dollar cost averaging in after the crash in 2018, that whole time, I would be a very, very wealthy man right now. I didn't do that, so my plan is to continue to dollar cost average in for the foreseeable future, really for the rest of this decade. And I stand by my price target that by the end of the 2020s, all right, by 2030, Bitcoin will be at least $1 million US. And we'll all get together in 2030, and we can talk about how right I was or how wrong I was. I know some of you precious metal maxis are going to say, no, it's nothing, it's backed by air. And I know a lot of you crypto folks say gold is obsolete. I'm in between, folks. Gold is definitely not obsolete, and I don't think crypto is nothing. So that's my spiel on crypto. So thank you for that question, Mass. And again, I'm sorry for butchering your name. All right, let's see. Is this moving gold and silver continuing? Yes, it is, although it's lost a little bit of its steam, but still looking good at 1850. Silver, not quite as good, but silver at 23.84. Again, I'm not making any moves in silver until I see us break above that 200-day moving average, which was right around 24.67. It's probably like 24.65 now. Markets still not doing so hot today. Looks like maybe we found a bottom, maybe not. Down 2.2%, Dow down just under 2%. Nasdaq, as always, down 2.6. Not doing so good. Anyways, folks, we've been going for about 45 minutes here. We're probably going to wrap it up a little bit. I'm trying out this Tuesday morning time slot. I don't know what you guys think. I decided I want to do the live streams twice a week now instead of once. I didn't want to do it in the afternoon. I already do the afternoon one on Friday, and some people's schedules probably doesn't accommodate, so I figured I'd do one in the morning midweek and then one to end the week on Friday. Let me know what you guys think as far as scheduling goes and what time slot, if you like this one or not. Also, real quick, I want to show you this one. This is a channel I follow on Twitter, or this is a user I follow on Twitter. I guess it's not a Twitter channel. OSIN Technical. It stands for Open Source Intel. And this guy is, he refers to himself as a defense journalist. But he just posts fantastic updates on movements of military assets and quotes from people. And I've been following this channel. This is one of the first things I do in the morning when I wake up is I check him for any updates on what's going on in Ukraine and in Russia. Because if it does come down to it lighting off, I think some place like this, OSIN Technical, is probably the first place you're going to see it. He'll probably have the update before it hits the mainstream press. That's just speculation on my part. But he posted something this morning I wanted to mention here, and I have confirmed this quote in a couple of media outlets. This is from one of the UK MPs. He says, the UK is becoming aware of a significant number of individuals that are assessed to be associated with Russian military advanced force operations and currently located in Ukraine. Okay, so that's a mouthful. I'm not sure that what to think of individuals assessed to be associated with Russian military advanced force operations. Does that mean Russian troops? Does that mean private contractors? Does that mean plainclothes special operators? I don't know. This is such long speak. Individuals assessed to be associated with Russian military advanced force operations. There are some kind of Russian military assets on the ground in the Ukraine already conducting advanced operations. That's what this quote is saying. Now, this comes out of the UK from their Ministry of Defense. I don't know the data. I don't know the sources that are backing up where they get it from, but I thought that was a pretty big update this morning, so I wanted to bring that one to you guys. And again, this Twitter user is OSIN Technical. Excellent, excellent source. And another thing I wanted to mention is that he has been tracking 6 Russian amphibious assault ships. And these are satellite images of those ships that he's saying. I know they just look like white dots on a page, but he's been following these ships since they left the Russian base in the Baltic Sea. And they are currently rounding Portugal, headed towards the Mediterranean. And if you look on a map, these 6 Russian amphibious assault ships, they left Russia up here, right? They sailed past the UK a couple of days ago. They're rounding Portugal right now. Where they're headed, they're going to head through the Mediterranean and into the Black Sea for some amphibious element of an invasion of the Ukraine, whether it's here west of Crimea or possibly here to the east of Crimea. But any big troop movements in Russia, my guess, will not happen until those naval forces, which are currently here, make it into the Black Sea. It'll probably take them at least another day or two to traverse the Mediterranean and get into the Black Sea. So that's something to keep an eye on. But there are amphibious Russian forces that have been making the long trip around Europe to probably open up some kind of a southern front if it ever came to an invasion. So again, that all came from this OSIN Technical outfit. Keep an eye on these guys. It's a great one to follow because if it lights off, you'll hear about it first in a place like that. All right, guys, I think with that, we're going to call it. We're going to try to keep these live streams a little shorter. I appreciate you guys joining me in today. Again, take a look at that link in the description. We've got this event going on in Dallas on March 5th. It's going to be a great time. I'm going to be there talking about Evergrande, and there's going to be a lot of great financial YouTubers will be there. So I hope to meet some of you guys and see you there. Reserve your spot now because they are going fast. All right, guys. Until next time, live small and dream big.